Good afternoon, traders and investors. Will back here with another one, coming to you with a Monday market recap. Hope everybody had a beautiful weekend. And in today's markets, guys, little bit of healthy rotation. Now, you notice that the SPY was down on the day, QQQ ending up green. Our loss leaders, financials and healthcare. They're taking a well-deserved breather after pretty much carrying the market for the last 2-3 weeks. So it was to be expected that those two sectors would have a little bit of retracement eventually. Now, what we look for on the channel is continued rotation in the markets. If our strongest sectors are rotating to the downside, taking a well-deserved breather, is our QQQ holding up the rest of the market? And today, indeed, was the case. I'm not going to lie, though, guys. I was expecting a little bit more of a move to the upside, especially after Friday's PCE inflation report came out relatively in line with expectations, contrary to the ones that we got in January and February. So in today's video, guys, we're going to be obviously taking a look at what happened in Friday's PCE inflation report and also the comments that Jerome Powell made on the report in an interview on Friday that same day, shortly after the report was released. And we'll also be taking a look, guys, obviously at our major technical analysis rundown in the form of a rundown on our indexes, major tech names, and lastly, take a quick glimpse into my portfolio for the trades that I've opened on this Monday session. So without further ado, guys, let's get right into it. SPY down about 0.17%, QQQ up 0.21%. Take a look at the heat map, guys. You will see that for the most part, very, very broad market day of selling, except really for big tech and semiconductors. They were largely what was holding the SPY from really falling off a cliff over the course of the day here today. Take a look, guys. We had a very nice gap up open. So last night when I was looking at futures, everything was very, very green. Even when I made my video last night, I mean, the QQQ futures were about up 0.8% and SPY was up about 0.5%. You can see though, gap up open pretty much into selling all day for SPY, and QQQ largely the same, gap up open, tried to maintain the gap in the course of the morning, and then just ended up selling off before having a little bit of a bounce in the day. As a whole though, guys, these indexes didn't really move much, and we can really see that in terms of how mixed the heat map was. Big tech doing a great job of making up for the lack of breadth in this market here today. For the most part, healthcare, financials really leading everything to the downside. On the one-day relative, you can see that even better. Communication services, energy, and technology to the upside. Communication services obviously led by your two biggest names in Google and Meta, but the rest of the market really came down hard, guys. And that was largely a byproduct of some rising yields today. So the 20-year yield was actually up about 2.25%, one of its biggest days in the last 2 weeks. Even the 10-year yield was up, 2.5%, which is also one of its largest days in most recent history. And there really wasn't anything negative in the inflation report that came out on Friday to warrant such a high rise in over the weekend yields pretty much, except for the fact that, well, the inflation report just didn't come in amazingly good. If the inflation report would have come in amazingly good, then you might have had some little yields being subsiding to the downside, right? As traders potentially price in some rate cut expectations, maybe as early as June. But for the large part, since the report came in pretty much in line, and that's where I'm going to be taking a look at next here, guys, really wasn't enough to move the needle in terms of rate cut expectations. So right before we get into that inflation report, let's take a look at the earnings for the week. Earnings for the week, really, really light. There's only Paychex, which is a rather big company that's going to be reporting tomorrow. But for the large part, guys, really nothing on the menu for the week in terms of large market moving companies. Also, in the news for the week, there also, in my opinion, isn't much to be had before Friday. There's a lot of, low impact and medium of impact events until Friday. Today, we had an ISM manufacturing report. You can see there's a bunch of Fed members coming in and speaking on Tuesday, and also one and a few more here on the Wednesday session. And we do have a couple other notable things like ISM services and stuff like that. A few more Fed members speaking on Thursday. So most of all of your Fed members will be commenting on the markets over the course of the week, but I don't believe that they will move the market. The one thing that will potentially move the market is the jobs data that we're going to get on Friday, which is in the form of the non-farm payrolls. It is your most important jobs report of any given month. So we'll take a close look on that. Even though there's a bunch of other things, I just don't think they're going to move the market too much. And here's why, because we're going to take a look at what Jerome Powell had to say about the PCE report on Friday. And I largely think that majority of the Fed members will feel pretty much the same. So in terms of the inflation report here, guys, very, very simple. Key Fed inflation gauge rose 2.8% annually in February, as expected. So the report largely coming in line. Take a look at your headline numbers here. PCE price index, excluding food and energy, increased 2.8% on a 12-month basis and was up 0.3% from a month ago. That was directly in line with the estimates. However, we did get a better number on core. Core PCE was up 0.3% for the month and 2.5% for the 12-month rate, compared to estimates for 0.4% and 2.5%. So we did beat on the month over month in terms of core, but everything, guys, pretty much coming in line. So what moved the needle in terms of the numbers? Let's take a very quick look at that. So rising energy costs help push up the headline reading. As you can see, guys, let's pull up the chart for oil. Oil has pretty much been on a very nice move up here, December, January, and February. So it's normal that these elevated oil prices are going to be reading into your inflation reports. That we already saw in the CPI numbers that came out earlier in the month of March as well. The food index edged up 0.1%, so that's relatively good. Inflation pressures came more from the goods side, which rose 0.5%, compared with the 0.3% increase for services. That countered the trend over the past year, during which services rose 3.8%, while goods actually fell by 0.2%. This is true, guys, right? We've been noticing that services have been a large component of sticky inflation, while goods have been down. Now, goods have had a slight little increase over the month of February, which was also showcased in CPI and PPI. Is it enough to move the needle, guys? I don't personally think so, and Jerome Powell doesn't personally think so either. We're going to take a look at a chart of this inflation mapped out, and I'll show you guys why it doesn't really move the needle in my opinion. Other upward pressure came from international travel services, air transportation. These two things can obviously be a byproduct of rising oil prices, especially in air transportation, right? Just tickets going up because gas is more expensive. And financial services and insurance. On the good side, the motor vehicles and parts category was the biggest contributor. So now let's take a look at exactly what Jerome Powell had to say about this report on Friday, with the fact that the report came in line. So here's what he had to say. The latest U.S. inflation data is along the lines of what we would like to see, said Jerome Powell on Friday. The PCE index data for February, which was released on Friday, is what we were expecting, Powell said. And even though the numbers showed less of a slowdown than last year, you won't see us overreacting. So reiterating pretty much the statements that he made 2 Wednesdays ago during the FOMC meeting, right? The data last month were not as low as most of the good readings we got in the second half of last year, but it's definitely more along the lines of what we want to see. So trending in the right direction. Powell's comments were in line with his remarks after the Fed's policy meeting last week, 2 weeks ago at this point, in which he said higher than expected inflation in January and February had not changed the sense that price rises would keep falling this year to the central bank's 2% target. So they're still relatively confident in inflation's ability to really trend down to 2% over the course of the year, which is exactly why I really don't think all of these Fed members speaking is going to have much of an impact. They will probably likely say the same thing, guys. Now, let's go down a little bit, and I want to show you the chart of inflation. So the green line right here is CPI. You can see CPI has been trending nicely, though everything has been getting a little bit more sticky here over the course of the months of January and February, as we've been seeing on the, we've been reporting this on the channel as well. Core PCI, the blue line, trending in the right direction. PCE, your red line, trending in the right direction, and is actually the lowest inflation metric. Apologies, my head was hiding that. The lowest metric that we have amongst all inflation readings, and that's what the Fed looks at here. Core PCE, the yellow line, trending in the right direction. And here's your Fed funds rate, which is the black line. So you can see when the Fed started aggressively increasing interest rates, they pretty much put a stop to this inflation. So they really acted quickly here. And in the 2-month span that they started doing that, inflation really started pulling back here, guys. So in my opinion, the Fed really did do a good job of countering inflation as soon as it saw that it was becoming a problem. And you can see that as soon as they start increasing rates heavily here, inflation starting to trend to the downside. And now, inflation is just being pushed continuously down by our high rates. So overall, guys, fairly good. But Jerome Powell said this. we need to see more progress on inflation before cutting rates. This is not something new. He's been saying this for months at this point. The decision to begin to reduce rates is a very, very important one. The economy is strong right now. The labor market is strong right now as well. And inflation has been coming down. We can and we will be careful about this decision because we can be. Basically, reiterating the fact here, guys, that when the economy is strong, the jobs market is strong, they just don't feel the pressure just yet to bring interest rates down quickly, in terms of an urgency, right? So they do feel that they can't afford to take a little bit longer to do that. So that was pretty much the gist of your PCE report and the comments that Jerome Powell had to say about it. So as we've been discussing on the channel, guys, nothing really changing, right? Inflation still trending down in the right direction. The economy is still strong and the jobs market is still strong. Now, for any one of these three things to start going very, very negative, it's not going to be 1 month of data that's going to prove to us that there's a problem. A trend can only be stated to be a trend if it happens for 2, 3, 4 months in a row. And as a whole, guys, we're just not seeing that, especially in inflation, right? Inflation, although it's been sticky relatively here at the 3% mark, have we seen a trend to the upside for the past 2, 3, 4 months? No, absolutely not, which is why, in my opinion, the Fed is also not worried about that. So with all that being said, guys, let's jump right into our technical analysis portion of the video right now, and you will see that really not much has changed, so we'll go over these indexes fairly quickly indeed. Now, in terms of SPY, still in a very healthy daily uptrend. However, we are encountering a little bit of resistance at our previous all-time highs, and that's normal. The markets really just haven't done much, guys, since our Fed meeting 2 Wednesdays ago at this point. Look at this sideways action, right? Just very healthy sideways consolidation. No red flags as of yet. Is the market struggling to break out of this all-time high? Yes. But are the bears gaining more and more control as a result of that? Not really, right? We're not taking out our previous low down here at 518.50, and we're also not taking out our moving averages just yet. So SPY still in the context of a healthy daily uptrend right here. Where the red flags arise is if for some rich reason we lose the 518.50, set a daily downtrend after not being able to make a new high, daily downtrend, then we look out to our big support area, which is this green box. And I don't have my trend lines on the chart right now, but if we want to derive them really quickly, right, we can just put one. Well, that's not the right spot. Sorry for that, guys. So if you want to derive the trend lines right here, very simple here, guys, right? Just tops and bottoms pretty much. You can see that we're really not close to pretty much losing our trend line at all on the SPY at this point. So everything's still looking very good. The red flags would really only occur, in my opinion, if we start a daily downtrend and really start moving a bit lower into the bottom end of this trend line. This area right here, if we flush this zone, talking about 516, 515, that's where we get a little bit nervous if the bears can potentially follow through. But as of now, there are no red flags just yet. Now moving on to QQQ, give me a very quick second. Apologies for that, guys. So on QQQ, very much the same analysis, right? We're still in the context of this gorgeous daily uptrend right here. And the bulls really have not lost too much ground. Although the market has been really trapped sideways since the Jerome Powell meeting, you can see it better on the NASDAQ. We're holding the daily bull flag as a whole, right, guys? So it is looking fairly good. Let me just pull this up as a whole. So I'm not going to go through these, but if you guys want to screenshot these are just the themes that I'm going to be looking to trade this year. In terms of the analysis, though, this is for QQQ, right? Very nice daily uptrend currently. Just looking for a daily higher low. Look how well the bulls have been protecting this whole 18,000 range, right, on the NASDAQ futures. Very solid area. The 12 EMA is right there, and we're coming up on the trend line as well. So the bulls really have all forms of support working in their favor right now. It is crucial not to lose this area, however. As of now, we're all good for that. What we really need to see, however, is a net break to the upside over the next coming days to really give us the confidence here, guys, that the markets are not ready to flush these lows. As of now, still no red flags because we're maintaining these levels. But in the following days, if we do get very nasty red days and flush this down below, it'll be your first loss of a massive 4-month trend line, and that will be notable to us. We'll be keeping a close eye on these charts over the next coming days. But as of now here, guys, no red flags quite yet. Now moving on to XLF Financials. XLF Financials taking a well-deserved breather after such a nice 4 days worth of rally. Just coming in, trying to set the daily higher low, anything above 41.20 pretty much. Just going to be a higher low for further trend continuation. Now, Where we start to get some red flags is if we lose these lows, 41.25, and then potentially set the lower high. That's when you may be in for the daily rollover, daily downtrend. That's when we may be expecting a little bit more weekly consolidation. However, the bulls are very healthy right now. We have put in some decent distance above this big red zone right here, which is previous all-time high resistance. So at this point, it was resistance. Now it will most likely be acting as support. So if we do choose to come down into this area, I do believe that this most likely is where we're going to stop the bottom end of this range, which should also coincide at that point with the 12 EMA, about 40.25. But as of now, guys, no red flags just yet. The bulls still in full control. Keep an eye on this low right here and the loss of your 12 EMA if you want to see some significant downside follow through. Now moving on to healthcare. Healthcare also looking decent. I mean, 0.85% to the downside, but all we did is just fill this nice little gap we had here on the Tuesday to Wednesday session, right? So now that the gap is filled, we're still just looking for the daily lower high. Anything above 145, just looking for the daily lower high for potential trend continuation. As of now, I see no red flags on the chart. Any red flags would happen upon the loss of these lows right here. 144.75, crucial level. It's been support for healthcare pretty much since the end part of February. So if we do lose that, that would be notable to us, would potentially set the bears up for a chance at a daily rollover, daily downtrend, and maybe even the weekly rollover into weekly downtrend as well. But as of now, guys, we're just not seeing that. If it does happen forever, however, for which reason? Well, the 142 area, this line right here, previous all-time highs, should be a very, very nice area for the bulls to pull back into, gain some bigger support down here, and then be ready to potentially take this market for another monthly move higher. As of now, though, no red flags. Daily bulls still in control despite this big red day of consolidation. Now moving on to IWM Russell. IWM Russell down about 1%. It's normal here, guys, right? As I keep saying, 17, 18% of the Russell is small and mid cap financial stocks. So when you see your larger financial stocks taking a little bit of a hit, it's very often possible that IWM Russell will end red as well. A big component of that is your small and regional banks. That is ticker symbol KRE. And as you can see, KRE is down about 2% on the day. So the Russell just not being spared from weakness in financials today. However, that being said, we are still in the context of a very nice daily uptrend. We ran into the top end of resistance on Friday. And this is a resistance that I've been talking about, guys, for the past couple of weeks right now. It's been pretty much the previous area of support back in 2021. And now it is currently acting as resistance. So very, very big level. Now, if the bulls get rejected from here, as they have been, well, we could be expecting just some daily consolidation, anything above 205, just looking for a daily higher low before maybe trying to mount into this resistance level and try to mount it higher, right? But if for whatever which reason we pull too low here and flush these lows, talking about those 205 lows again, that's when we have a few red flags, could set the bears up for potentially a daily downtrend, and that would start weekly consolidation. It's a good thing, though, that the bulls have tons of space on the weekly here at this point, anything pretty much above 200, just looking for a weekly higher low for potential trend continuation here, guys. So really not much happening in the form of the Russell, still looking good, just battling with some very heavy overhead resistance, right? I would personally be more interested in the Russell really at this point, guys, only if broader markets sell off at this point, right? I don't think the Russell will be able to rally on its own unless the rest of the markets rally. And same thing to the downside here, guys. If the rest of the markets pull a technical sell-off in the month of April, maybe SPY and QQQ coming down 3-4%, something like that, that is when I think we're going to get some more juicy buying opportunities in the Russell, maybe in the mid 190 range, which is where I want to pick it up myself. But as of now, guys, no red flags. Just keep an eye on your most recent higher lows. Now moving on to the Dow Jones. Dow Jones also with a red day, 0.6% to the downside, but the Dow Jones is very healthy right now, in my opinion, right? Keep an eye on this higher low, 39,250. This low right here, which is pretty much the low of the last Tuesday session. The bulls are still in control of this daily uptrend, not able to break our all-time highs. That's kind of like SPY as well, right? Really struggling with the double top right here. So we'll see how this acts over the course of the rest of the week, but the bulls still remain in full control. I would like to see them maintain above my yellow line right here, previous resistance, current support level, and that is going to be pretty much our 39,250, almost right in line, right? Maybe about 30, 40 points off from your higher low here. This whole region right here, guys, 39,250. Really important for the bulls to hold that, because if we break down below, it'll be daily downtrend, and then we might be in for some weekly consolidation. But the bulls have a decent amount of space here, guys. Anything above 38,500, just looking for a weekly higher low for potential trend continuation as well. So really keep a close eye, guys, on this yellow line. That is going to be what controls the Dow Jones in the near-term future. Now, let's move on to our major tech names as a whole. So in terms of big tech here, guys, we're going to start off with Apple, of course, and Apple on the day down 0.85%. Wow, it has now been so long, guys, since we've seen 2 consistent days of green on Apple in a row. You've had 2 here, but prior to that, guys, they are very few and far between, right? It's just been a very rough time for Apple recently, really not being favored by your mainstream media, and especially by analysts. It's pretty much getting through all of the analyst downgrade cycles right now. So completely normal that the price action is relatively muted. Keep in mind, Apple does have earnings in roughly 3 weeks' time on the 25th of April. So it's going to be curious to hear from them. Are the rumors of the China iPhone sales slowdowns true? And if they are true, does Apple have any positive news to counterbalance that? Are they going to talk to us about their new AI suite of MacBooks using the M3 chips? Are they going to be talking about the new iPhone release? Are they going to be talking about new iPads? And especially, are they going to be talking about new partnerships for AI leading into their June WDC conference that is also known as the Apple, pretty much Apple Presentation Day, Apple Innovation Day. That is pretty much going to happen in June. So those earnings are going to be very crucial for us. But as of now, Apple really just struggling towards the lows here right now, desperately trying to protect the 170. It was a battle all day around this $170 mark here, guys. Take a look at this. Really came fast down into the 170s, and the bulls did a great job here of trying to play defense for a majority of the day. So we'll see what happens with this stock over the course of the week. Obviously, we could be looking at a daily downtrend. That would be a flush of 169.42. Break that. Daily downtrend, unfortunately, simply continues. And your weekly sell-off simply continues as well. The weekly downtrend would continue. At that point, we'd be looking down to about 166 for our lowest low to act as the last line of defense. Because after that, guys, the next support level comes in the 155 to 150 range. So a little bit of a drop if ever Apple loses this. Now, Apple's been hit with so much negative news, guys, over the past couple of weeks, and still has not really broken down from its massive support zone. So I still like this support zone. And keep in mind, the markets, guys, have been doing fairly okay, right? SPY has been maintaining the levels, and QQQ has been maintaining the levels relatively well as well. And that is all without Apple's participation. Take a look at Apple's participation year to date. It's actually down 11.7%. So imagine if Apple actually did participate to the upside over the course of this year, well, your SPY and QQQ would largely trade higher because Apple is still the second largest component in the entire market. The market really needs them. So in my opinion, guys, if you really want to see a breakout on QQQ, we're going to have to get Apple in the running for this breakout as well. It's very tough for the market to gain significant levels without its second largest participant being participating pretty much in that rally. So those are the things I'm looking out for on Apple. But as I've been saying, I still do think that this area right down here, anything below 170, is a tremendous buying opportunity, whether or not you're trying to swing trade the stock or if you're a long-term investor in Apple. Now moving on to AMD. AMD not looking too bad here today at all, 1.58% to the upside. And what we're trying to do on AMD here, guys, is really reverse this daily downtrend that we've been stuck in for the past 3 weeks at this point. Now the bulls have an engulfing move. So we finally engulfed the most recent leg of selling almost to the tune of 100%. We're trying to get above this big area of resistance, and now we're starting to try to get above it, right? The moving averages are sitting there as well. So there is a hefty amount of resistance right around the current price, 183, 184. But if we mount above that, it'll give the bulls a very good chance at being able to set a daily higher low using this area of resistance now as support, potentially testing it, and then breaking out for the daily uptrend. So that is the pattern I'm looking for on AMD. If ever the bulls fail that and we start losing these levels, well, the daily downtrend just continues and we take a look at our larger support area, which is going to be pretty much in the lower 160s. Why this level is so key? Well, it's a crucial weekly level here, guys. 165 down to 160. You can see it acted as big support for the bulls pretty much the entire month. Late January into mid-February pretty much, and was also the previous all-time high area of resistance. So 165 to 158 is the stronger area in the event that the bulls can't get it done and we have to go a bit lower to garner some support down there. So AMD looking good. As I've said before, every time AMD comes down into the lower 170s, I'll be looking to play it in the mid 160s, selling some short puts very close to this support line. So AMD looking good. The bulls trying to get step number one out of the way, right? Step number one is the engulfing move. Now we need to reset the daily uptrend. So keeping a close eye on that. Now moving on to Amazon. Amazon still grinding higher, but Amazon, I'm not going to say it's weak, but it's kind of weak. You know what I mean? Although it is pushing higher, I will give them that. They're just unable to close a solid green candle here above our area of resistance. This area has been a very problematic area for Amazon all throughout 2020 and 2021. The 178 area. Now we are above it now, but it's kind of pulling in Netflix. And if I pull up the chart for Netflix, kind of like when we grinded above the 575 area here, right? Just pulling above a massive area of previous resistance. And we just started grinding above it for the first couple of weeks. Amazon is displaying pretty much largely the same price action right now. We are above it. We are in a very nice daily uptrend, but the bulls just aren't very strong as of lately. I can't blame them though, because really QQQ and tech as a whole just really hasn't been strong over the past couple of weeks, guys. As I said, healthcare and financials have been doing most of the heavy lifting over the past couple of weeks, and technology for the most part, even semiconductors, have been fairly muted. Have they been selling off? No, it's just been a lot of intersector rotation, right? Amongst the technology sectors, it's just different names that are participating now. Amazon has been one of the stronger ones, so they are in a nice daily uptrend. Anything pretty much above 176.49, anything's just gonna be looking for a daily higher low for further trend continuation. Now, I need to see them hold the 178 and the 12 EMA, guys. Need to see them continue this daily uptrend a bit higher so that they can use this 178 as support if ever we want to pull back into it to just continue this trend higher. On the weekly, we are still looking good, guys. It is a technical weekly breakout to the upside. Weekly uptrend looking very healthy. Our next area of resistance is the all-time high right about at 188. So we'll see what happens with Amazon, but as of now, no red flags. Moving on to Google. Google also having a tremendous day, 2.78% to the upside. New all-time high on Google, and Google has had one of the best rallies that I've seen in this stock for a long time, since early March. The month of March for Google has been very kind to it, right? 19% to the upside, looking tremendously good, but it's very hard to chase this stock at current levels, even though it is, fairly valued in terms of the fundamentals, in my opinion. So in terms of the price action here, guys, we are in the context of a tremendous daily uptrend. Any pullback at this point, going to be looking for a daily higher low, anything above 147. Just going to be for a daily higher low for further trend continuation. Google really clearing above all areas of resistance at this point. So we're just going to be looking to the lower time frames, the hourly especially. If you lose the hourly trend you may be in for a little bit of daily consolidation. And as I said, the bulls have so much space here, guys. Anything above 147. Any pullback going to be looking, even for myself on Google, right? If we can come back, pull back here, maybe into the lower 150s, 152-ish, I may be looking to shop for some 149, 148 short puts for a little bit of a swing trade. All in all, Google looking really fantastic, right? The weekly downtrend is almost pretty much fully engulfed at this point, right? So even at this point, if we have a daily consolidation, if the rest of the market has a technical sell-off, Google is positioned very well on the weekly, set the weekly higher low, and run for the remainder of the year. So any future dips on Google, in my opinion, will probably be the last period this year that you can pick up Google stock. Google stock has earnings coming up Tuesday, 23rd of April. Now, moving on to Meta. Meta trying to defend its area. We're going to get into that, right? Trying desperately to defend the 488 area that we've had planted on this chart for a very long time. So they had a nice day, 1.19% to the upside. Very good. However, coming dangerously close to our lows, right? Keep an eye on these lows, guys. 480 is going to be absolutely crucial. I wish I could draw straight lines. It would make my life a lot easier. But for the most part, guys, 480 is going to be a crucial level. If you lose that, well, you do lose the daily uptrend as a whole, and you set the bears up maybe for a daily downtrend. Facebook has not had a daily downtrend, guys. Oof, it's been a while, right? Ever since the month of November at this point. So would be notable to us if we lose these lows and set the daily downtrend. At that point, you'd be due for a bit more weekly consolidation, and we'd be looking to our lows 455, 457. to act as a long, as a last line of defense for this stock pretty much, right? In terms of the weekly is looking very juicy now because with this sideways consolidation over the past month, we've now brought our weekly RSI back down to more respectable levels. It was at very, very extended levels to the upside. Now it's more respectable. So at least Facebook has been consolidating sideways, which is a best case scenario for the stock, right? There's only two ways you can cool down a stock that's so overextended. One is a very quick and rapid and significant drop. Number two is just a bunch of sideways consolidation, and then you get the cool off on the RSI. So no red flags as of yet, guys, but just keep a close eye on 480. The bulls really at this point need to get back above our resistance area, which is roughly, we're above it now, not clearly above it though, right? We're at 491. This line's sitting at about 488. I would need to see them come closer, guys, closer back up towards 500 to really guarantee that the bulls are not going to lose this area into a daily downtrend, which would mean further weekly consolidation all the way maybe until earnings, which is Wednesday, 24th of April. So as of now, no red flags, but Meta is definitely on the watch if ever we lose these levels for downside continuation. Now moving on to Microsoft, give me a quick second. Sorry about that, guys. Usually the coffee always ends up cold, so I have to actually drink it while I'm making these videos, right? So in terms of Microsoft here, guys, so Microsoft 0.92% to the upside. Fairly decent day for Microsoft. Nothing bad to say about them. They're still in the context of a very beautiful daily uptrend, right? We were looking, can they retest the top end of this range of consolidation? And why that was important, it's because Microsoft tends to go into these sideways areas of consolidation after a large move up. Large move up, sideways consolidation, large move up, sideways consolidation. Now we were looking for the large move up to continue, but they didn't get the breakout all the way. And when we started retesting, we were forecasting that at worst, they could come down to about 416. This yellow line, use it as support and run. We didn't quite get there, only got as low as about the 12 EMA. Before now, we are starting to regain those lower time frames. You can see the bulls trying to reset into an hourly uptrend now, which would mean that your daily move down has concluded and that we are potentially on for another leg higher. So we'll keep a close eye on that for Microsoft. And as I said before, the levels to watch out to the downside at this point, guys, really is this level right here, 415, 416, the top end of this line. We just would not want the bulls to get stuck back in this range, because at that point, that would be a look above and fail, which would just send probably Microsoft in for some further weekly consolidation, pretty much all the way until its earnings, maybe Tuesday, 23rd of April. So looking for Microsoft to, continue this monthly breakout to the upside, it needs to crack at this point, obviously 430. You get a beautiful next daily leg up, and your weekly uptrend simply continues at that point. So no red flags on Microsoft. The red flags would come if we get a daily candle close below 416, 415. It would really put this daily uptrend in a bit of jeopardy and get us stuck back in this range. Now moving on to Netflix. Netflix looking decent today, 1.15% to the upside. And we were really watching Netflix, guys, late last week because they did something that they hadn't done in a very long time, pretty much in 3 months. They lost the 12 EMA, this yellow moving average right here. We lost it, and Netflix had not lost it for a very long time, 3 months at that point. So now at this point, guys, the key level is, do we set a lower high into lower low? And to watch that, we need to take a look at our lower time frames. Big sell-off by the bears. Now, if for some rich reason over the next couple of days, we lose this new hourly trend into tomorrow or Wednesday, that would mean your daily bounce is finished. And then we look out to our lows here, 601.38. Loss of that, you lose the daily uptrend. It becomes a daily downtrend, guys, on Netflix. Daily downtrend, no biggie. Why? Because it'll just be healthy weekly consolidation. Anything above 550, just looking for a weekly higher low at this point. You can see Netflix has been struggling for a better part of the last 5-6 weeks at this point, trying desperately to grind higher, guys. But as you can see, right, this one day here, Friday, 1st of March, it then took them the entire month of March to get back this one single candle. So Netflix, a little bit weak, could potentially be waiting for earnings catalyst, which is going to be one of our first tech names to report Thursday, 18th of April. So coming up quickly here, guys, in roughly the next 3 weeks. So keep a very close eye on the 575 level, it is going to be huge at this point. 575 is the level we broke out from. So we'd like to see the bulls hold that. It's a good thing that we have confluence, right? The 575 horizontal support and our 12 EMA are right down there. So Netflix, not looking bad, but I will be looking out to earnings. If earnings gives me an entry, guys, down into the 540, 550 range, I'm definitely taking it. But no red flags as of now. Keep a close eye on Friday's low, lose that daily downtrend. Then you just look for more weekly consolidation. Now moving on to NVIDIA. NVIDIA looking somewhat decent today, right? Very big day for NVIDIA. One of its biggest days in most recent memory, 0.01%. So very, very flat, pretty much similar to Friday, right? Friday and today, basically no trade for NVIDIA, right? Just didn't really do anything today. That being said, we are still in the context of this great daily uptrend right here. Keep an eye on your lows, 850 to the downside. Just looking for a daily higher low for trend continuation at this point. The bulls are doing a great job of defending your 12 EMA. You can barely see these daily trading candles, right? I almost have to, pretty much hide the moving averages temporarily so you can actually see these candles of trading. So very, very weak performance by NVIDIA, but you can't really blame them, right? They've been leading the market for pretty much the last 3-4 months. So it's okay that they've been sideways consolidation for about I would say about 3 weeks at this point, right? But still haven't lost the daily uptrend, and we still are not yet in weekly consolidation because we've never lost the daily uptrend. It's just sideways consolidation on the daily and kind of sideways consolidation on the weekly as well. All of that is contributing to bringing down some of your higher time frame RSI numbers, right? The daily is now manageable, and the weekly, although overbought, it is not as overbought as it was a couple weeks back. So that is also trending in the right direction. What we want to keep a close eye on here, guys, is the low here, right here, 850. If you lose 850, you set the bears up for the lower high into lower low, which would just mean further weekly consolidation. And you guys know my levels. I'm looking out for $800 all the way down to about $750. This sweet spot right here is where I may be looking to make a little bit of a play, come down to there, weekly higher low for further trend continuation over the course of the rest of the year. And if we do get a severe drop off like that, well, the RSI is going to be at a much more manageable level on the weekly as well. But as of now, guys, no red flags whatsoever. Now moving on to Tesla. Tesla delivery numbers come out pretty much tonight, essentially, right? So that'll be very, very noteworthy to see. They're going to be releasing them pretty much overnight tonight. So we'll be getting those over the course of the evening. Maybe they're even out right now. I haven't checked. I'm recording the video. So we're going to take a look at the delivery numbers tomorrow. But as a whole, guys, price action is going to be fairly limited until we get those delivery numbers. I took a look at the market expectation for how much this could move after delivery numbers, and it's about 5% up or down. A lot of analysts have been predicting a slight slowdown in deliveries, so we may be getting a negative number for that. If that does happen, guys, well, keep an eye on this daily uptrend. So far, we are still in the context of a daily uptrend. The lowest is right here, 166. You lose 166, you lose this 2 weeks of daily uptrend. We were going to get pretty much an engulfing move, and it sets the bears up to just smash this lower right into earnings, which is coming up Wednesday, 17th of April. So price action should be fairly limited. As I said, the expectation up or down was about 5%. 5% to the upside would pretty much clear us into a new high and set us into just furtherance of this daily uptrend here. At that point, we'd be targeting pretty much the 190 level. And why that's important, guys, is because if we get as high as 190, it would really be a sizable bounce, right? Take a look at your fib levels right here. If you want to see a healthy bounce by Tesla in terms of the next coming weeks, we need to see them get as high as about 188 all the way up to 195. Get me up to 195. The bulls put in enough of a move to create some space to start reversing this weekly trend from a downtrend into a potential uptrend. Now, obviously, the weekly trend reversal takes some time, so we are in the early stages of it. So keep a close eye if that's to the upside. And to the downside, guys, 5% from here to the downside would just mean that most likely we will be in jeopardy of losing these lows, in jeopardy of being sent down into another daily downtrend, and just perpetuating this weekly downtrend further down. At that point, guys, you will be looking to the bottom end of the trend line, which is currently about 152 from this area. Coincidentally, it is also the low of our last area of support, which is all the way back here last April, a year ago, for Tesla. So keep a close eye on those two levels for the stock once we get those delivery reports coming in pretty much tonight. Now, moving on to Palantir. Palantir also not looking the best here today, 0.65% to the downside, and really Palantir just falling back here into a bit of a lull, right? So they were downgraded by 2 analysts after the in the course of the Friday session, 6.6% to the downside, and even today, although they did have a relatively negative day, at least there wasn't much follow through in the form of 2, 3, 4% to the downside. So Palantir trying to play defense as best as it can right now. Unfortunately, this daily uptrend has now been engulfed to the downside. So at this point, the bears are set up pretty nicely to set a lower high into lower low. Your moving averages can be above us as resistance. And just this whole area right here, guys, right? 23 all the way up to pretty much 2350, right? This whole level right here can be acting as resistance with those moving averages, might be setting up lower high into lower low. Daily downtrend, but that's okay, guys, because on the weekly, we are still just in weekly consolidation mode. Even if we lose our weekly lower, higher low right here, which we're about to lose right now and still get sent a bit further, it's okay. Why? Because we're coming up on the biggest area of recent support for Palantir, $21.50 down to about $19. Huge support 2021. Previous resistance here. So this area should be the likely area of support. And at this point, guys, with such extended drawdown over the past 5 weeks, we're just really looking for the monthly higher low, right? It's a gorgeous monthly uptrend, just looking for the monthly higher low for further trend continuation over the course of this year. No red flags with Palantir's business as a whole, guys, just very healthy consolidation after that extended earnings move, right? So looking very, very decent. Earnings for Palantir, not very close, only coming up on the 6th of May. One thing's for sure, guys, if we do continue down here, I will be looking to build a bigger Palantir share position, $21, $20. And at that point, we'll be wanting to ride it for the monthly trend continuation higher, bringing us up maybe into the higher end of this range, 27, 28 before we encounter further resistance. So keep that in mind for Palantir. And then lastly, PayPal. PayPal not looking too bad today, even though it's down 2.93%. Why is it not looking too bad? Well, we've always said, guys, that after such a significant rally, take a look at this rally from PayPal pretty much, right? From the early stages of March, we were up 17%. So now we are getting a little bit of sell-off. PayPal obviously highly correlated to interest rates and yields really coming up today did not do them any favors. So PayPal, keep an eye on here. 64.76 is your higher lows. We're above them, but the bears have taken back all of this move almost, which does probabilities wise set them up maybe for lower high into lower low. Now, if that happens on PayPal, in my opinion, it'll be a tremendous buying opportunity. We're just looking for a weekly higher low after 3-4 weeks of nice rally, looking for the weekly higher low for potential trend continuation. And that trend continuation, guys, in my opinion, is going to bring us up into the $75 range. PayPal is in full breakout mode right now. I'll remind you of the few catalysts that we had on PayPal in terms of technical breakouts. Well, number one, healthily above all our moving averages, including this green line, which is your 200-day moving average, healthily above that for the first time since late 2021. So that is noticeable to us. The second thing that's very noticeable to us is the fact that we're above this 2 years worth of downtrending channel line. We're now healthily above that as well, above our short-term moving averages in a daily uptrend, which, we're kind of losing right now. But the larger timeframes now are deeply in control by the bulls. We are now in a weekly uptrend as well. Right. And in terms of the monthly, I showed this as well. We are, the month of March was closed beautifully, right? We are in a monthly breakout pattern too. So everything in the long-term pattern is looking good for PayPal. Why I say it's not too bad, guys? Because we're coming up on the buying opportunity zone. If for some reason we hit the daily downtrend here over the next couple of days into next week maybe, and end up with, maybe an extra week or two of downside leading us into this lower $63 to $60 range, that's where I'm looking for the breakout of this zone, retest, and maybe run. I'll be looking to make some swing trades here for the potential continuation all the way up into the 75 region over the course of the next few months. So PayPal not looking bad despite its sell-off if you're keeping track of the higher timeframes. The bulls are still in control. Just keep a close eye. Daily downtrend would be into a nice buying opportunity zone. So that's pretty much everything for our stocks today. Now let's take a brief look into my portfolio and take a look at what trades I opened. All right, guys, so taking a look at the positions that we opened today. So you'll see that I did take one of the trades that I was forecasting on the channel last night in the video. So we took the Apple 167.5s. Now, Apple was trading lower over the course of the morning, so I saw the 167.5 strike available. That was roughly at the 10 a.m. mark. At that point, we were trading roughly just at or under 170. So I kind of went for it. There wasn't exactly 0.5%. 0.5% would have been roughly 85 cents on the bid, but the 80 cents just wasn't available here, guys. Since we were too close to 170 and Apple doesn't really have 169 or 168 contracts, they work in $2.50 increments. I went with this one anyways, just because it's very comfortable. Now, in terms of annualized ROI, it's not that bad. It's just very, slightly under our 0.5% rule here. I am fairly happy with this trade as a whole. So we'll see how that one plays out. Was one that was on the watch list for the top 5 options last night. Now we still do have the CLH $78 put. Probably should have closed this one this morning, guys, because CLH, when it opened, it really opened hard on the morning here, opening in the $84, $85 range. And when I was looking at my position, it was down to about 24 cents. So we were up pretty much, 60, 70% at that point. Maybe should have closed, but I just, I like the level that we're at. $78, if I do get a sign there, I would not mind at all. Gonna let this one play out for the next few days and see how this goes as well. So we're just going to hold it, guys. Still got my 0.5% rule for the stock, and that is good for Friday. So still going to maintain the position. Now, I did write a few positions here on Expedia, which has been one that I've been watching out for on the channel for a while. And this one, I jumped the gun on it slightly. So Expedia, when the market opened, there was not that much red here, guys. And usually I take most of my trades between 9:30 and 10. And at that point, not much volatility was in the market as a whole. But one of the few stocks that was down roughly around 2% was Expedia. So I took this one when it was trading roughly around the $135 mark. And I was eyeing the bottom end of this whole range that we've been stuck in pretty much since your post-earnings session. The expected move for the week was about 133.01. And at that point, we were trading around the 135 mark. So I said, you know what? Let me take a trade around the expected move and slightly below. So that was my first trade, the 133s. I got those for 59 cents. Since Expedia doesn't have that much volatility over the recent weeks, it was hard to really get above that in terms of half a percent. If only I had known, obviously nobody knows, right, whether the stock's going to just continue dropping at that point. Even when I took the trade, we were in 5-minute oversold conditions. We were in 15-minute, pretty heavy oversold conditions down here, but it just continued. That's why I obviously didn't get the best price on the day, but I'm still happy. 60 cents for the 133s, not quite 0.5%, but I am happy with the level on this stock. Thereafter, I wrote the 132. So when we kept dipping here, guys, about half an hour later, around 10:15, when it was in the low 134s, I went with the 132s. Obviously, on the end of the day, it ended a lot lower in the 133.20 range, but that's okay. I'm confident in my 132s. Those we did get 81 cents for them. So we'll see what happens with Expedia. I've been saying that this is one of the swing trades that I've wanted for a while, so I really can't complain if ever I'm assigned the stock. With the premium that I've collected and the average cost of the shares, I should have an average cost here, guys, down in pretty much the lower 131 range. So that's really not too bad. The downside, in my opinion, we might be able to get as low as maybe 125, but there's big levels down there, guys. The whole top end of this range and our 200 weekly moving average is also down there too. So in terms of the downside, I'm not too worried. One of the reasons that I love this stock the most is the fundamentals that we saw on their earnings. PEG ratio of only 0.54. So much growth in the next couple of years for this company. Such a solid company in terms of fundamentals as well. Take a look at this nice EPS growth over the next couple of years, and nice revenue growth as well. Really no red flags with the company whatsoever, which is why I'm very confident in its ability to outperform this year, especially considering that travel is one of the favored trades for the year as well. And then lastly, the new trade that we took is the Palantir 21.5s. You can see that I went very conservative on these. Palantir wasn't down too much over the course of the morning here today. I took this one when it was down about 1%. I really wanted to see it a little bit lower. The reason I only did one is if ever we get some extended sell-off tomorrow, let's say we come down into the $22 area specifically, well, at that point, guys, I'm probably going to be able to rent the $21 strikes. And I really want to get as close as possible to $21, $20 as I can. So I only did one little feeler trade on Palantir here, 21.5 puts for Friday, 13 cents for them. So that's roughly our 0.5% rule, right? 0.5% would be about 11 cents. I got 13, happy about that. Didn't go as heavy as I would like. So tomorrow, if we do get some more sell-off and the $21 puts open, the 21.50s are fine. It's the top end of my range, but I really want the 21s or better to really give myself the best risk reward possible. So if ever I'm able to get the $21 tomorrow with some further downside, I will take these with a bit more size, potentially adding, 3, 4, 5 more contracts to a 21 strike position. And the rest of the portfolio, guys, nothing really has changed. I still have my calls for May on Apple. Those really haven't been performing too well at all, right? Apple just cannot line up. And I took these 2 calls when we had that extended sell-off day. I jumped the gun a bit early, midway throughout that news event day where Apple got the lawsuit from the Department of Justice. I took that trade in the mid 173s. And so far, we've just been really sidelined on Apple. But I do believe if we do get a little bit of recovery here, maybe within the next week, if we can jump back into the 174, 175, these calls should become profitable. I'm really looking to sell these calls as close to 180 as possible because Apple right now, guys, has just been so weak, so sidelined. I do really believe that when the run happens, it'll be a very quick run, 3-4 days like this, which takes us from the low 170s back up to the mid 170s, high 170s fairly quickly. So that's why I'm maintaining these calls, not looking to take the loss. It wasn't that big of an entry position to begin with, only about $1,000 that I put up for these call contracts to begin with. And now we still have the Amazon calls. These are the 160 in the money leaps for March 21st of 2025. Those have been performing okay. We're up pretty much, $1.50, so roughly $150 on those. And I do still have some small swing trade shares. Going to be looking to add to these. Still have Mercado Libre, looking to add that under 1,500 if I can find it. SPGI, that one's kind of been diddling around there as well. Nike, not high enough for covered calls yet, and also not low enough for short puts. I really want to get $90 or better on the short puts to average down into this position, lower my cost basis closer to about 100. And then also you have BABA. BABA really caught between 2 positions, not high enough for me to write covered calls. I'd like to see closer to $78, $79. Getting my 0.5% to 1% rule to be able to write those calls. So far, just chilling there. And to the downside, I would be interested in writing BABA puts closer to $70, $71. And for that, we would need a little bit of a sell-off. And you can see Alibaba today was actually green on the day, about 1.5% to the upside. Let me move myself over. So about 1.5% to the upside. I would like to see Alibaba with a nice down day potentially, coming down into the 72s. At that point, I'll be able to write the $70 and really not be nervous about the position whatsoever. Not that 72 is a bad strike if I were to write at it. I just want to get as juicy as possible. Since we are in a losing position right now, we just want to be able to manage the risk a bit better. So I'm looking for the lower $70 range. Other than that, guys, really nothing much has changed. Fairly light week, didn't go too heavy just yet, except maybe I jumped the gun a little bit quickly on Expedia, but I am happy with all of these positions. So we'll see what tomorrow's trading unlocks if I can write more positions on some more of the stocks that were featured on the channel. Still looking maybe for ON Semiconductor tomorrow, $71, $70. If those open up, would be very happy. Still looking for a SoFi trade. SoFi came down to about $7.10 today. I really want to see it come down into $7 because if it comes down to $7, the put premiums become very, very juicy, guys. So I'm looking as close as possible to 7. Might be getting a little bit greedy for it, but I am looking for the SoFi breakout trade. So I may just write them tomorrow regardless, pretty much. And the other one we're looking out for, guys, is Datadog. Datadog need to see this one right below 119 as close as possible. It had a little bit of a dip this morning, but really there wasn't much premium. There was some premium at 119, but I'm looking for a bit lower, guys. 117, 116. For that, we'd need like a 1-2% day worth of sell-off. And the last one we were looking for is Shopify. Shopify also, provided us a little bit of a dip this morning, 76, but I really want to see something more significant down, $75, $74, and unlock the $72, $71 strike, which in my opinion is just a much more solid area. And if we do get that little sell-off, I'll probably throw 2 contracts at it down here in the 71s. So that's pretty much all the trades that we did today and the ones that we are continuously looking out for on the week. So hopefully you guys enjoyed today's video. If you did, consider dropping a like. Would really appreciate it for the growth of the channel. And also, if you're new, consider subscribing to the channel, guys. Almost 1,000 subscribers. Looking forward to it, guys. And I thank each and every one of you for taking the time to subscribe and watch the videos. It means the world to me. And as usual, guys, if you have any questions whatsoever, please leave them down below in the comments. Take advantage of this time. We don't have any earnings for the next couple of weeks. So if you want me to pull up some tickers, some charts on the screen and do some analysis on them for you, no problem at all. Just throw the tickers down below in the comment section and I will be happy to do, 2 or 3 of them a day, depending on how much time we have. So take care, guys. I'll see you in tomorrow's video. Peace.